All right, hello everyone. Now this is a case study video. Remember in this morning's video, I said be careful for these hours. They're not a place that I think the market will make a swing. However, I did say this is a dangerous place and we need to look out for it because this could be the beginning of a push move. So for example, just like this impulse here, okay, and the formation we have here, as you can see, that's the impulse and that's the formation, right? As you can see, within the formation, the market's getting close to those hours and these hours are going to be important. And remember in the video I talked about 5,960, okay, why that was an important level, and immediately the market touched it and retraced. So these hours here can now be a push hour and could actually be the beginning of an adjustment move, right? So that timing is really important. This is why keeping track of what we're doing technically and timing wise is really important. But you can see it's fun. Okay, why? Because the trade is already covered. Okay, and we know when stuff's going to hit the fan. All right, or when this sudden move's going to happen. So knowing when something's going to happen is really important because I don't have to panic and I can adjust myself. And if I know that this is going to be a dangerous place for us and that it could also push down all of a sudden and bring us down, whatever, then you can see my stop loss is already above the entry. The TP1 is already done. I posted this trade in the members area exactly after I've done it. I entered the trade and then I took a screenshot, made a comment and uploaded it, and it started moving straight away. Why? Because this was the trading hour here. This was the formation, and as the trading hour was breaking out, okay, I've made an entry with a tight stop loss and then it covered and now we're moving. So if the market goes up, what we're going to do is just simple. We're going to go into, if it goes in our direction, we should push into the PST level, shouldn't we? Right, and that's 48.51, which is 6,002, which is why I've moved TP2 to 6,000. I initially had it just underneath the weekly pivot because they like the weekly pivot, but seeing that the price is at 5,987 and the PST is lower than 6,022, I thought I'd be a bit more conservative. But what I'm going to do is this. If the market keeps pushing up until we get to New York, okay, until we get to New York, if it keeps pushing up, I'm just going to push the stop up and I'll push the profit up as well if it keeps going up. If not, if it just touches it, I'm also happy with it. As you can see, that is a really nice intraday trade because when I entered, I had the stop loss just under there because if I was correct, it should not go below this level if the timing is correct, okay? And if it does go below that level, we don't want to be in there anyway. So why take the risk, right? So very tight risk, and in such a trade as such as this, you can also see that we're taking like 1 to 4, 1 to 5 profit within a day, and the first trade is already covered. The second one is like, bingo if it hits our target. Already you can see this is like 1 to, well, pretty much 1 to 1.5, 1 to 2, because I covered the 1 to 1 here. Okay, so it's just above 1 to 1, all right? And the stop loss is moved up. So if it does go in our direction, great. But remember, knowing the hours when the market is going to have dodgy moves, right, is really good because you're not in the stress zone. You're managing your trade, not just according to price, but according to time. How great is that?